Joining me now with more is Basenese. He's a founder of TheBigSkinny.com and EVP of Market Strategy at Prairie Operating. Lou, it's great to have you in the studio and welcome.
Good to be here.
Yeah, look, we've got a lot going on in this market after what was quite a volatile April. Consistently, we have been moving higher with very little down days in the past 2 weeks. What's behind this?
Yeah, I really think the roadblocks were tariffs, right? Everyone was fearing the repercussions that could hit 6 months out, 9 months out. But underlying that, earnings growth was really strong. So as soon as we got those roadblocks out of the way, or at least clarity that they're not going to be there for long, you're seeing the earnings growth come in even higher and optimism about the back half of the year. So this quarter, analysts expected like 6% earnings growth for the S&P 500. It checked in at 12.5%. Back half of the year, we're looking at double digits. You get a tax cut that provides some more fuel to the economy, maybe an interest rate cut. So I think you have the underlying fundamentals were really strong. The valuations were just getting a little stretched. So we got a nice reset. Everyone got to take a breath, reevaluate what's good values, good bargains in this market, what's growing fast, what's not.
Yeah.
And let's get these trade wars behind us.
Yeah, so we do see 90-day pauses on some of these trade wars, right? Temporary trade truce with China, if you will, between the world's first and second biggest economies. How should our viewers navigate what does seem to be a pause right now, at least in terms of the most escalation?
Yeah, I think there's trepidation that the pause can turn into another round of fighting. And I think in this case with China, they can't do it. They tipped their hand by announcing more economic stimulus before the meeting with Scott Bessent and really showing that they can't afford to lose the U.S. business. Now, U.S. needs China too. It's not just end goods. We use about 37% of the imports for intermediary goods, but China is going to suffer possibly a 2.5% drag to their GDP if they don't resolve this with the U.S. So that's too big of a hit for them to weather at a time that they're really struggling to tread water at that 5% GDP growth rate. So I think as investors, you have to look in this market, where are the opportunities, where are the bargains that came about because of the pullback that haven't rebounded completely back to their former highs, and really be sensitive to that, right? You don't want to chase the overpriced momentum stocks in a market like this. You want to buy the under the radar, undervalued ones that provide you another margin of safety.
Where do you see opportunity to that end, Lou, both in specific stocks and perhaps sectors?
Yeah, so sector wise, I think energy has been undervalued, unloved for way too long. We're realizing that we need energy independence, and there's a price point where that makes sense. It's probably closer to $70 a barrel. So just the energy sector as a whole is trading as the cheapest sector in the S&P 500 right now. I also like semiconductors. I think, everyone gets caught up in the AI hype, but if you look at it, the underlying trend, everything we have here from computers to laptops, cameras, have chips in them. I mean, anything you can think of.
Dishwashers,
right? Your refrigerator, everything and anything that doesn't deserve a chip gets a chip. So you can play that underlying trend with a TSM, Taiwan Semiconductor, because they make 70% of the chips that go into everything. And you win in every case that semis do well versus just playing in an NVIDIA that is an AI, pick and shovel play.
You mentioned earlier maybe a Fed cut, right? And that seems to be like the next conversation, right? So the trade war is managed for now. We are anticipating an extension of the tax cuts, that to get pushed through as part of President Trump's agenda. And then the next big question does seem to be, well, what happens with growth and how does the Fed respond? So how much of a wild card is that to this market?
Yeah, I think the president wants us to think that Jerome Powell is a wild card. And, he missed the boat on the front side, but I would argue, and this is not a very popular stance, that he's the most disrespected man in finance right now because he's actually played it very well. He's been waiting for the data to change, and it hasn't yet. The labor data has been really strong.
You're right.
Inflation is still staying pretty stable, a little bit higher than target, so it doesn't make sense for a rate cut just yet. So I think what you have to look at really carefully is retail sales to see where those tariffs come in. We didn't see it in the April report, maybe in the May, and then the labor market. Are we seeing a deterioration in jobs? Because that's going to be the trigger for the Fed. I think we maybe get a cut in September. I think that's the outside chance.
Can the market climb higher without rate cuts?
Yes, because earnings are growing. So I think that's the counterbalance to not having lower interest rates to kind of grease the wheels. So pay attention to earnings, pay attention to the labor market. Those are going to be the two levers that determine what the Fed does next and where stock prices go.
So I do want to talk about the consumer, right? Obviously, consumer spending drives 70% of overall U.S. GDP. And we've seen consumer sentiment weakening since the start of the year. astronomical in some ways,
Yeah,
right?
yeah.
Relatively speaking, inflation expectations that they anticipate, fears of empty shelves because of trade policy changes, what have you. What do you expect from the consumer? What do you think is the right way to play it from a consumer standpoint?
Yeah, it's like parenting. Like kids say they're going to act one way and then they actually act differently. Consumers are no different. They talk about worrying about 6.5% inflation. They talk about, sentiment plummets, and yet they just keep spending. So I think you have to look at the hard data versus the soft data. This, April retail sales report is more important because it's mostly goods, and that's only 30% of spending. But you're seeing restaurants and bars, travel, there's still expenditures happening at the consumer level, which people are waiting for credit cards to be maxed out and savings to be depleted, but we haven't hit it yet.
Yeah.
So I think the consumer's resilient. There's been very few periods in our economic history where you've had quarter over quarter declines in consumer spending. It just doesn't happen. We all go out and find ways to make enough money to buy the things we need or want.
New highs?
New highs, yes. I think new highs are in the cards. And I without a rate cut, I think that's a bold prediction, but it's all based on earnings, right? So we haven't seen a deterioration in earnings yet. If that changes, then, full disclaimer, that prediction's off the table.
We're just about 3.5% from a record high. Seems like it is within striking distance.
I think so too.
All right, Lou Basenese, he's a founder of TheBigSkinny.com and EVP of Market Strategy at Prairie Operating. Lou, thanks.
Thank you.